Hey, welcome to Macro Atlas. Today we're going to be discussing how low can Bitcoin go. So in this analysis, we're going to be taking it from a point of view of the 4-year cycle for Bitcoin, specifically the bear market phase of that cycle. We're going to be taking statistics and date ranges and make it all graphical so that we can all understand it better. The first thing that we can actually see from this analysis is that we actually topped near the dates of the previous microcycle tops, right? So for the 3 previous market cycles, the top had been between 12 November and 16 December. Okay, so we actually topped in October, but that's pretty close to where we should usually top in terms of dates, and that's a good sign that Bitcoin is, yes, deviating a little bit, but it's just a little bit, which is normal in distributions, right? So it's like maybe one standard deviation away from the actual mean, which is fine, right? So that's the previous micro tops, all right? The previous bottom dates, the exact dates have been around 10 November and around 11 January based on previous market cycles. I'm going to take one example here to just showcase the idea. 11 November, that's have been the extreme range, and the one here was 9 November, which should be within that range. Yeah, so 9 November is somewhere right there. Oh, and that's the extreme range as well. So that's some of the market cycles, that dates that are relevant. And so from a date wise, based on the 4-year cycle for Bitcoin, especially the bear market phase, we should bottom somewhere around here. But statistically, if you take the number of days it took from peak to bottom, for example, in that area here, from that peak to that bottom, it took around 363 days, but I believe it's around 364. Wait, this is just off by a little bit by accident in one way or another. But yeah, this has been 364 days. The previous one has been 365 days, and this one has been around 411 days. Okay, give or take a few days. So the average is around 380 days. But I would want to take, just to outline, because 2 times, if you take the median, right, or the mode, then 364 days should be around here, right? Approximately. So that would put us at 5th of October, okay? Because it happened 2 times in a row. If you take 380 days, then that would put us around the average. That's 380 days, the average. That would put us around October again. So in the month of October, both of them align in terms of the mode or actually the average, all right? But if you want to take the whole 411 days, the maximum range, then that should be, it's there because of the dates wise, right? But if you take the 411 days, that would actually put you around November. So October, November. And November is within the previous bottom BTC dates, okay? So that's something to consider right here. Between October and November in terms of the average and range and mode of the day's length, okay? Now, we can speculate that, all right, we will find the bottom around October, November of this year, but how low can we go, all right? That's the important part. How low can we go? Well, we do a similar approach. We take the percentage drawdown. For example, in the previous bear market cycle, it has been minus 77%. If you want to round it up, it's minus 78% and minus 84% and minus 87% if we round up. Okay. So if you take all those dates and put them here, we find the average. Then we get an average of 83% drawdown. Now, before you scream, the hell no, we're not going 83% down. Let's take just the data for what it is, and then at the end, at least I'll give my opinion of where we could go, and I don't think it's going to be 77% or 83%, just for the fact that here we're seeing a trend, right? A descending order of magnitude, right? So we got 87%, then we got 84%, which is minus 3, and then we're getting 77%, which is around minus, right, 7%. So if you assume that we get another minus 7% or 10%, because the magnitude of the increase is also increasing from -3 to -7, right? So that's I'm a +4, you know, I'm a -4, additional -4. So if we just take the additional -4, then that would put us around, we should see an -11, right? So we first had -3, then we had -4. So the, sorry, -3, -7, sorry, -7. And the difference between them was, well, -4, right? Between the -3 and -7, you need to just -4. So we can, if you just do, it will be -11 if we also do -4, okay? That would put us to around 77 -11, which should equals to minus, okay, we need to plus here. And then we get a -69. That's just by simple observation, okay? I'm gonna leave it here, some notes, all right? Just if you want to, if you maybe will use it later. So if we say that we're gonna go down -69%, that would put us around that range, which coincides with the 400-week SMA. And I'll say why these moving averages are relevant in terms of market cycles, and how we actually descend one by one soon. But first, I want to explain this bottom range prediction, which I indicate as highly speculative range, because I don't believe we're going to go to that. There's just a pattern that is playing out. We're getting diminishing drawdowns, similar to how we're getting diminishing returns, and there's a pattern that that is being played out, right? So if we take all those, just nevertheless as a thought process, and we put the maximum and the minimum range, right, of that minus 87 drawdown to 77% drawdown, 77% is here, which sits around approximately $28,800. And if you take the higher end of that range, minus 87%, you get that as $16,230 per Bitcoin, which I don't think we're going to near the bottom again. All right, that's almost, I mean, unless there's a huge catastrophe or Bitcoin code breaks down, it's difficult to imagine that Bitcoin would go that low, as we had never visited previous lows in any previous bear market cycle. Yes, we are actually getting closer and into the range of the previous bull markets, but to say that we're going to go to the previous low, it's pretty hardcore, right? So let's assume we would not do such a thing, but this range will remain in here just for future reference in case the macro fundamentals really worsen, then we could be looking at that range, right? But with current conditions, I do believe this is difficult to believe. So I would take the analysis that we will probably get to around the -69% of $38,500, which seems reasonable to me, and I'll explain why. Now, in every market cycle, if we go to here, where these moving averages were important, we actually, in that bear market cycle, we touched on the 350-week SMA, all right? And then we actually went below to the 300-week SMA, all right? So there's a 15 being increased. Excuse me. I hope that wasn't loud. Then I think we're going down maybe to the 400-week SMA, which goes in line near that calculation that we had. Also, what's important is that markets are narrative driven, and this bull market was characterized with ETF inflows and etc., right? And the ETF was launched around here. That was the high previous to the launch, but I believe that this will be a critical moment that investors will look at as an important event and a possible bottoming. That's why I put the target bear market range here, as it aligns with that number, with the 400-week SMA, the descending, slowly we're descending, and also because of the eventful significance of this range. Now, surely I would believe that we will break this consolidation area at some point or another, Now the next major support is of course going to be that phase. This one is just usually, if you can see, and where there is not much liquidity, just trading volume or consolidation periods, Bitcoin just breaks right through it. There's no foundational structure that support. There's no important support phases, right? I believe that phase is going to be similar, and so the next major support for Bitcoin's price will be within that range right here. So in terms of price structure, in terms of market cycle analysis, and of course applying some of our biases to it, and doing just simple calculations, it seems reasonable to me that there's a high chance we would be hitting in that zone. And therefore, you can see my target bear market range isn't really a specific date or a specific price, but rather I like to work in ranges, as that increases my odds of being correct and successfully executing my trades in a way that it's not too risky, and I wouldn't be like, yeah, I really wanted the 38,000. No, I'm happy if price starts to show some strength right there. I'll just exit my position or start accumulating some Bitcoins, and I'm definitely looking to accumulate a lot of Bitcoin right here. So my range is around the $45,000 a Bitcoin range to the 38,000 range of Bitcoin. And that place also has major significance in terms of previous market cycle, where you see a lot of support in that range, a lot of consolidation periods that can act as major support for Bitcoin's price. I hope this video has been useful. If you did learn something and enjoy it, please leave a like. And if you want to see more content like this, that includes statistics and unbiased views, and we include some of our biases here and there, of course, that can be explained in a logical way, then do please subscribe, as we provide a lot of content from technical analysis to fundamentals in this channel. And please trade safe. I'll see you in the next one.